Hi, thanks for joining us. I'm Deborah from Adelaide Capital, and today I have joining me Chris Vermeulen from the technicaltraders.com. And I'm super excited to have him on our show because I love charts and he's a technician. So I really want to ask him a bunch of questions, particularly about the precious metals and metals space. Chris, thanks for joining us.
Thanks for having me on the show. Yeah.
Well, it's really nice to meet you. We haven't met before today, so that's fun. I love Zoom meetings where
Yeah.
we don't know the person. But we actually just found out that we're both CEOs of our own tiny companies, so we have
Yeah.
that in common. We both like outdoors and water sports, which is fun. But the reason that I asked him on the show is because Adelaide Capital is hosting our silver conference on June 11th. And I wanted to get his perspective on silver. It's had a good move here. It started to close that gap with gold and the ratios compressing. And I just wanted to get an update from a technician on what he thinks silver looks like in the short and near term, and also gold. So, Chris?
All right. Well, I like precious metals a lot. I think there's a lot going for them. Coming up for your silver event there. I mean, silver is on the cusp of a huge move, I think. And I think it could be very close to what we saw back in 2010, where it just goes ballistic from, $17 up to $48. And I really like it just because it's a highly leveraged kind of play in terms of precious metals. Gold, percentage-wise, won't move the same. But silver's been building this base for years, and it hasn't broken out yet. Gold's already had its kind of big run. It broke out last July, I think it was, and it's pretty much at the 2011-12 highs or topping phase. So that's kind of run out of a little bit of steam. But when you look at silver, I mean, it is in the infant stage. It hasn't quite broken yet. But the gold miners have broken, and I think silver will be next.
What's your breakout level for silver?
I would say around $21, really, somewhere in that range there. There's a previous high from a few years back that's kind of significant. So I think that'll be kind of once it gets to that level, I think it's broken far enough from where we are now that it's kind of broken that resistance area where it's going to naturally get sucked back down. I think people will start chasing price at that point. So 21 is a really good level that I think once it's there, I think it's got that upward momentum and should continue to carry on.
So what's your short-term and long-term outlook for silver? You can take short-term as short as you want. 1 day, 1 week, 3 months.
Yeah, I cover it. I cover it all the time with subscribers. So I like to cover all the time frames because it's easy to get confused when somebody says, hey, I'm bearish on silver or I'm bullish on silver. And I'm both, and it just depends on the time frame. So short term, this is Tuesday morning, I was talking to subscribers and I say, hey, silver's at resistance, gold miners are at resistance. I've got some short-term indicators that tell us when the different markets are overbought. And they're all overbought yesterday. The stock market, gold miners, gold, silver, they were all actually screaming overbought. And so I told everyone this morning before the market opened, look for selling over the next couple of days. Don't be alarmed if we actually see broad market selling. We see stocks go down, we see bonds go down, we see almost everything go down. We've seen that a few times recently where everything just kind of sells off for a day. Everybody just kind of cashes out and tries to regroup. And that's kind of what's starting to unfold today. I looked at the charts just before we came on, and silver and gold and miners started to plunge, which is perfectly fine. That's what we need them to do. They're at resistance. They're supposed to back off. We don't really want them to go straight up because what goes straight up comes straight back down. So that stair-step action is key for long-term growth.
What kind of retracement would you be looking for here?
I mean, I'd probably be looking for probably 7 or 8% pullback maximum, I think, in silver, somewhere in there. So, I mean, we're down 3% or 2.5% today. So, I mean, we're, a third of the way down. I think it could consolidate here for a couple of weeks. But once it starts another uptrend, I think if it can break out this 21 level, I mean, it's going to be really exciting.
Yeah, I agree. I like the chart on silver right now, and gold, obviously, like you said, it's been in a bull market for a while. So you mentioned indicators and being overbought. What are the key indicators that you look for?
Right. So I look at a bunch of different stuff. I use my own custom cycle analysis. So when certain cycles are topping out, that means there's probably not a lot more upward momentum for, over the next 2 or 3 days. I also use the NYSE volume ratios. So the up volume divided by down volume, and then also the flip. And when those are over 3, that's usually a sign when the market's overbought and you see big money start to step in and sell off positions and take profits. So everything kind of stretched to that level yesterday in terms of on the NYSE. And then more or less just some simple Bollinger Bands. Everything just kind of really popped and got overextended in the last couple of sessions. And they usually just fall back between these kind of standard deviations and pull back to the mean.
And when you're looking at a chart or when you're looking at a trade, like what's your time frame? Are you looking like in 20-minute intervals, hour intervals, days, weeks, or do you start large and then just compress it down in terms of time?
Right. So yeah, on my chart behind me, I always have 3 time frames. So I look at the daily. I have a 30-minute regular trading hours only, and I have a 10-minute 24-hour chart. And those give me that kind of the full view. I like to see the daily trends because I'm a swing trader. So I'm looking for trades the last 3 days to, maybe 60 days. They do get a little long sometimes because the market never moves the way you expect it to. It can drag out much longer. And so I always like to look at those time frames. And I use the 30-minute really for my entries. I use it for intraday oversold territories. When we have a new buy signal, I wait for an oversold intraday. We jump into the trade, and then it should kind of recoil and bounce back up very quickly for us. But the daily chart is my kind of main pattern, and then I use the shorter term for entries and exits.
Here's one for you. Do you look at your charts typically on candlesticks, or do you look at them on graph lines?
On which? On candlesticks or?
On candlesticks or just the typical graph or the close open?
Oh, right. Yeah, like a bar. So the daily and 10-minute, I look at it on candlesticks. And the 30-minute, I use a bar. And the reason I use the bar on the 30-minute, where I can see the open, high, low, close, is just because this custom trading system that I built for identifying market opportunities, when to get in, when to trim out, when to re-add, it's easier for me to see where the open and close is on the bars when the bars are like just a color. Because if they're candles, all those candles will be green, and I have no idea if that candle opened up at the high or opened at the low. So the bars give me that kind of in, out, in, out. But other than that, I do like candles because they're the really nice visual, and I keep that on the daily chart because that's my key trend.
Yeah, I like the candles too. It does sound like a lot of voodoo, but they really do work, which is bizarre and helpful.
They do. I mean, I love it. There's some great patterns out there that, this recent pop in gold miners, there's that big frenzy. Everybody piled in a few days ago, and it spiked way up, and my email inbox just got flooded with everyone we're missing out on GDX or GDXJ or the gold miners. I'm like, this is like, you guys are telling me this is like the top. You guys are panicking, and I can feel it in the air, and I feel excited because it's moving, but I'm like, we're going to wait for a pullback. And then it pulled back. We got this beautiful dip on gold miners a few days ago. It got oversold and reversed, and we got long, and it's already rallied significantly. I mean, it's amazing sentiment when it's
just to clarify, when you said you felt like it was the top, you meant of that leg.
I meant, on just a swing trade, on just short term for the next week or two. That's it.
So let's go back to the question that I asked in terms of silver and kind of widen it to all precious metals, gold and silver specifically. So we've talked a lot about the short-term trading. Where do you think gold and silver go from here?
Yeah, I really like them long term. I just loaded up on a ton of silver and a bunch of gold just in the last week and a half because I think we're on the cusp of something really big and bad happening in globally or the financial markets or with no deliveries of silver. I mean, there's so many things stacking up and
civil unrest.
Yeah, exactly. There's a lot of things going on. And I think long term, I look at gold and silver as just buying insurance. It's like insurance on your life savings, more or less. So the way I see it is I buy physical, I have it stored, if the financial system crumbles, the stock market or brokers go under and can't pay, or something happens that's no one's predicting, I mean, the nice thing is you've got this store of wealth of metals that you can actually go and pick up, and they should rocket in value when the rest of the world crumbles. And I mean, I would think they go 10 or 20 times their net worth or their wealth now, if the market crumbles. And so that's what I position my long-term capital in. You know, I try and keep 10% of my net wealth in metals, because if something really bad happens and real estate crashes and the currency goes value, it has no value. I mean, I want to have something that's going to go up and counter that. So that's the way I see it. And long term, I see silver $50. I see silver $100, believe it or not. Gold, I see 21 happening here this year. I see 26 next year. I mean, there's some crazy, $5,000, $20,000 forecasts on gold, which I would love, but I'm not the one who usually goes to those extremes. I kind of stick with more logical stuff and scale up in those forecasts as the price charts start to point to those. But I'm very bullish on them. I think we're going to see much higher prices.
I totally agree with you. I think given what's happened, and not just with the pandemic, but with what's starting in the US, I think that we're going to see a lot of civil unrest around the world.
Yeah.
And with all the currencies, all of them devaluing themselves, you really have to go to hard assets, and hard assets are metals, real estate. What else? Like, I don't think people are going to massively go and buy real estate in this environment. So I think it does have a nice setup for metals and mining.
For sure. And the negative interest rates too, right? If you're going to have to pay to store your money, you might as well store a metal at the same value per year and know it's not a fiat currency getting printed to death.
Exactly. So going back to a couple things that you said. So first you said that you had 10% of your holdings in physical metals. Did I get that right?
Yeah.
Is that the only way that you play precious metals, or do you buy ETFs? Do you buy stocks?
Right. So I don't buy individual stocks. I buy the ETFs like the GDX, GDXJ. So I actively trade precious metals in my active kind of investing and trading account. So I trade them to maximize growth. But in the long term, kind of set it and forget it. That's where I've got 10% of my, in metals, and I just accumulate, and I'm just going to let them mature. And I mean, even if they never go up in value, it doesn't matter. It's peace of mind. It's knowing that I'm secure if something bad really happens. And that's the way I play it. It's just insurance, which, at least it has value every year versus, other ways to play things where you can lose a lot of money trading different asset classes for metals.
Oh, I've been there. So say you trade actively. You're talking about swing trading, which is a longer time horizon than day trading, but not as long as like a buy and hold strategy, which is what you have with your physical. How much capital are you using? Not a dollar figure, but in terms of, you said you have 10% in physical. What percent are you trading with in ETFs and whatever with your swing trade strategies?
Right. So for big money, for not a small trading account, but for my kind of main trading, I focus really on the SP 500 and bonds. And I'll rotate between long equities like the SPY ETF or a leveraged one. And when I have a sell signal on the SPY, I would move into the TLT. And then I just go back and forth. And sometimes they kind of mesh and cross. So I might have half a position in SPY, half of the portfolio in, I'll trade 100% of my portfolio in one of those at a time. Sometimes they cross over where I'm 50% bonds, 50% SPY until something changes, and then I'll put the rest back into the other one. So I'm constantly playing that kind of risk on, risk off game. And about 40% of the time I'm in cash. And that's kind of something that a lot of people can't wrap their head around. They're like, why are you in cash? To me, cash is king. I love it. I don't care what happens in the markets if I'm in cash. I just wait for the next setup. And we were really lucky with the market crash that took place. We were long the SP 500 in February. As it started to roll over the second day in, our trailing stop that we had been raising, knowing something bad was coming, there was going to be some type of correction. I thought it was going to be a 5% correction, not a 35% correction. allocation. But as long as you've got rules in place, you've got trade management, position management, you can do really well. So our system had said, hey, big money is piling into the risk-off assets. They are going into normal bonds, they're going into gold, they're going into utilities. So when we see this huge shift, I've got a software that allows me to gauge how much is flowing into those. When it starts outpacing the stock market, all those combined, I know there's huge money positioning for something really ugly. So we got into bonds and we rode that crazy bond spike up for about just over 20% gain as the stock market crashed. And then we liquidated and we sat in cash for a month as the market collapsed and fell. And I'm all about preserving capital and making slow, steady gains. And so we avoided the crash. We profited from it through bonds. And now we're back to the long side. And now we're getting into precious metals because the metals are coming into favor now. To me, this is the beginning of the end for the stock market. I think we're coming to a bear market. And this is when gold miners typically start to shine, which they are showing signs of life. And I think they're going to have a good run here for a few months and possibly many years, but take it one day at a time, really.
I agree with you. So one thing I wanted to clarify, so when you say that you are in cash or you go to cash, is that USD or is that Canadian?
I go to USD. So I moved all my money to USD years ago when Canadian, the US dollar was at par. I'm in Canada. So when it's at par, I'm like, hey, I want to get some US dollars because it's at par. And so when I moved everything over there, and of course the US dollar's been on the rise ever since. So just holding in US dollars, I mean, that gain alone is about 40%, 35, 40%, depending on the day. And this is the one thing that I think a lot of people don't recognize is, and you'll appreciate this being Canadian, is when the market crash took place in February, March, after we exited our positions, we sat in cash. We sat in cash for a month. And the only asset that went up that entire time was the US dollar. It rallied 11%. So people are saying, well, why are you just sitting there in cash? I'm like, well, we have no risk. And we just went up 11% around the world. Our money is now worth 11% more than everyone else. And there's huge money to be made or saved by being in the right currency, base currency, when you move to cash. I still think the dollar is the one to be in. I think it's toppy. I don't know how much higher it's really going to go with what's going on and all the printing. But if everyone else is printing, then everyone's lowering their value, then maybe it actually still stays the same, right? So I don't know how that's going to play out. If everyone devalues, then, I mean, the US dollar still could be fairly strong for a while. But when the dollar does roll over, I mean, that's when we're really going to see precious metals take off. That day will come.
Totally agree. So just to summarize what you're saying is if people are going to trade in the US and buy US stocks and buy US ETFs, they should set up a US trading account, or in Canada, you can have a division of your account that's US and just keep the cash in that currency. I know a lot of people get whipsawed in the conversion, but that's been your strategy. Not that you're recommending it to other people, but that's been
for sure
for you.
Yeah, and a lot of brokers, like you go with RBC or anyone, and they ask you which account to select, and they convert it back and forth. Some of these people are trading like a conversion fee in and out, and Royal Bank,
lots of fees there.
It's like 2 to 5% exchange rate sometimes. It is just ridiculous.
So that was a little bit of a divergence because I just wanted to clarify because I think it's important because you can get whipsawed on the currency exchange rates.
Yeah.
But what I really wanted to talk to you about after your last statement was, like, I'm a small cap person. My market is small cap Canada, very myopically focused on that. I'm a generalist, so I work in every industry. I watch the US markets, but it's almost like peripherally. Like, what are they doing today? Okay, I get it. Like, I watch the Russell a little bit more closely, but you truly do focus a lot of your attention on the US market. So I wanted to ask you about that as somebody that doesn't know a lot about the US markets, to be perfectly honest, or shouldn't say doesn't know a lot, doesn't follow the trends closely. Yeah. Like, what do you see with sector rotation in the US and also in Canada, if you can answer both of those?
Right, sure, yeah. So I'm the complete opposite of you. I look at the Canadian markets, like the TSX, maybe once a month. Like, I don't follow Canadian markets at all. I mean, I just stick to the US because that's kind of where money is traded. It's bigger liquidity. There's more opportunities depending on the type of trader you are. But anyways, back to which sectors are the key ones. So right now we're seeing sector rotation into the defensive play. We're seeing, if you were to look at the daily chart of XLU, which is the utilities ETF, that has formed a beautiful bull flag. It's been out of favor for about a month and a half. It just started turning up about a week ago, and it's really picking up the slack. And this is what we saw back in February. You'll see utilities start to pick up speed and start to outperform or equally perform. And that's a really bad sign for the overall health of the market. That means big money is getting defensive. We've also seen big down days on the NASDAQ, which is tech heavy. Tech has been beaten up pretty bad. You don't really see it when you look at just the charts, but we have big up days in the US stock market in small caps, Dow, the SP 500. The NASDAQ will be down and the big tech companies will be down. So there's big distribution going on, and they're rotating from some of the big tech names that are now overbought at resistance near the February highs. That money's now going into consumer staples, XLP, the utilities, XLU. Even healthcare has got a beautiful bull flag pattern. It's on the verge of breaking out to new highs. So all these defensive plays are coming to life. And that to me is the sign that something is brewing. How big of a pullback? 5, 8, 10%? Or do we start the first major bear leg down? Like, who knows? And it's just play at one kind of bar at a time. But there is rotation going on. And I talk about this with subscribers. I show it on the 30-minute and 10-minute intraday charts in the mornings, how the market walks the price up in overnight and pre-market trading in the United States. There's like no volume. They walk the price up, and then at 9:30 at the opening bell, it's just massive, heavy distribution going on, huge selling. And it happens over and over again. And you won't know it unless you follow the intraday price action. But the market more or less gets stepped up through night, gets sold off with heavy distribution selling, and they keep doing it. And the market keeps moving higher, but there's huge selling going on. And the shares are going into the hands of the average Joe thinking that we're in a new bull market.
When you say heavy distribution selling, can you be a little bit more specific what you mean?
Yeah, so it's institutions are huge money managers unloading shares. So heavy volume, big volume. Right? So you'll see volume levels spike, and it's all on the sell side. So they're dumping shares during the opening bell where everyone's all excited because stocks are about to gap up another 1%, and there's a ton of liquidity at the opening bell and the closing bell. That's when you see this kind of distribution. These big players come out and they just start dumping shares into these pool of piranha investors who want to buy at these levels, and they're gobbling it up. And it's just how they unload their shares.
This is why in every market cycle, people say that retail investors get burned. It's the distribution.
Exactly. They buy right at the top and panic out at the bottom. It's painful.
So when you were talking, I'm not allowed to look right. I have a screen here, and I'm always accused of looking right and not paying attention to what I'm interviewing, but I'm always looking up something. And it reminded me of when I did my CMT and did a bunch of work on technical analysis, there is that market cycle. And there's sectors that perform well in different phases of the market cycle, like you referenced, like healthcare, defensive stocks. That's the end of the cycle. And I couldn't remember the terminology, so I looked it up. And I think it changed in the last 10 years because it doesn't sound familiar. But what you're saying, the distribution phase certainly is familiar, but they're saying distribution phase and then into marketing phase, which is a new term that I hadn't heard before. I don't know if you have, but this is what you're talking about, where we're at in the cycle of a bull market.
Yeah, so John Murphy, he's where I learned all my technical analysis back when I was a teenager.
Right.
John Murphy, technical analysis of the financial markets. It's, 3 Bibles thick. It's huge. And anyway, I read that. I read it again. I highlighted my notes, and I learned everything kind of from him. And on stockcharts.com, he's got this, simple graph of showing the economic business cycle and the stock market cycle and how they overlap, but they're not timed the same. And yeah, exactly. He shows, utilities are near the top just before it's about to go down. So we are definitely in that later stage. Precious metals are coming to life, utilities. I think I think things are going to get really exciting. People thought a 35% dip was, horrifying. I mean, things could get a little uglier. Although we're not there yet. Right now, we're in no man's land, which is between the February high and the March lows. And whichever way we resolve is going to be a huge move. We could have this massive stimulus-powered bull market that climbs the biggest wall of worry we could have ever thought, or we could break down and roll over and go into a bear market in a recession, just like we saw in 2000 to 2008. I mean, it's not the end of the world. It's just a cycle. There's always a different reason why it happens. I mean, it's just price action and sentiment, people panicking and buying again. So no matter what happens, it's not the end of the world. As a technical trader, we can follow it and profit from it. But we're in no man's land right now, and we just got to see where things are going to resolve.
Well, like you said, you can always make money if you know which trade you want to be in and which side you want to be on that trade, which leads me back to the platform that you have, the company that you have. If you want to explain a little bit what you do and how people could benefit from the research and the work that you do.
Yeah, sure. So I focus on 3 different time frames of trading. So I've got a long-term investor signal, which is more or less passive investing. So you can more or less, I'll tell you when to get into a bull market, when to trim off, and when to get positioned for a bear market. So very passive. Trades last anywhere from a year to 12 years, really. It really depends. Every year there'll be new opportunities to add new capital to the market. I also have another service called the Technical Wealth Advisor, which is playing slower trades, more or less. They're position trades. They last on average about 40 days. And that's the one where I'm talking main money is rotating from the stock market and then to bonds. It's just a risk on, risk off. And sometimes we go to cash when there isn't any clarity in the market. So, and then I have an active swing trading newsletter, which is called the Technical Trader. And that's where we actively trade natural gas, silver, miners, the indexes, sectors. And that's a little more active and a little more colorful in terms of what we trade.
So a little bit for every style of investor, really.
Yeah.
And how do people get in touch with you? How do they subscribe for any of your services?
Yeah, they can just go to thetechnicaltraders.com, and there should be a contact page, and you can just send me an email, and I reply to all the emails. So fire away with any questions. And
you actually do, because I emailed you.
Yeah. I mean, you know what? One of the best.
Your LinkedIn game's a little weak, but email.
I can't stand LinkedIn. I can't stand it. It's all spam.
I get so many messages, and I put out a lot of content on LinkedIn, so I feel like a little bit of a sham. But
yeah,
if you want to get a hold of me, email's the best way, like yourself. And I hate to do this because rapid firing questions is not my preference, but there was actually a couple things on my list that I wanted to know and I haven't had a chance to ask you.
Sure.
So we're going to go rapid fire for a minute.
Okay.
So what's your favorite chart right now?
My favorite chart. I do like the gold miners ETF, like the gold miners sector in general. I think it's primed and ready. And silver, both of those are in the same category. They're flirting with a massive move.
Can you name those ETFs?
Sure. The ETF for the gold miners, there's the large caps, that's GDX. And then there's the mid cap, which is GDXJ, which stands for juniors. And then the silver ETF is SLV. And I like that sector. I mean, as I told you, I've purchase more physical metals because I really think there's a lot of chaos in the world. I think things could get pretty ugly, and it's their time to shine. It's been a long time. They're out of favor. And you look at like Robinhood Trader, that brokerage account, and you can see which stocks everyone owns, and they own all the losers. They're all into marijuana stocks, and they're all into all those ones that are trading down. And there's only one gold mining stock on there. There's no gold ETF or anything. And it's just insane. And so that means the masses aren't in it.
Stock is on there. Do you know?
I can't remember which one it is. It could be Newmont, or it could be, I'm not sure which one it was.
Well, at least it's a decent one.
Yeah, it was a big one. But nobody's interested in them. And that's what's exciting is, even though we are in the precious metal circle, so we feel like everyone's into precious metals, but really you go outside of our bubbles And everybody's like, gold stocks, or I want weed stocks, or, they all want crazy stuff.
Well, I think that there's got to be a little bit of education that happens in the mining space. I think I don't want to judge millennials. I'm on the cusp of being a millennial and not a millennial. But I think that there's like a negative vibe about mining that's not entirely accurate and a resistance to investing in it. But I also think that returns and performance can overcome a lot of bias. So
Totally.
you have to kind of get up the curve in terms of educating people about investing in precious metals,
Yeah.
base metals and mining. But I think that'll come in the next year.
Yeah.
And then back to my rapid fire.
Okay.
I think you already told us, but what is the best technical analysis or behavioral finance book you've read?
Right. So, yeah.
I know what your
would say,
title is, but is that your favorite?
I haven't read a lot of books and really since then. I mean, that one was the best book to me just because it taught me what I know. It got me to where I am today. It's just simple, straightforward. I mean, it's kind of data driven and chart patterns. And I'm not a big reader. I don't like to read. So I love stuff full of charts. And that's why I love trading. And that's why I don't follow fundamentals. I don't want to read reports. I want to look at colorful charts and just skip around until one goes, oh, that's a nice one. So that's why I really gravitated to technical analysis, because you can just click, and by the time the page refreshes, you instantly know if you want to look further or you're on to the next chart. And so you can skip around to find just the sweet spot, jump in, trade it, move on. But yeah, John Murphy to me is the best. Martin Pring has got a similar Bible, which I read as well. And I didn't enjoy that version. Ryan Shannon had a really good book.
I don't know him.
He runs a trading newsletter as well. He had a really good book. It's red and white and green on the cover. It was a very good book. More or less everything I took and really thought is the most powerful and technical analysis. I wrote my own book. And so I've got my own book. And so I like that one just because, members read it and they go, oh my gosh, I understand the mental game. I understand risk management. I understand the key aspects of that you need to follow for the market to catch trends and to identify them. And so I break it down into really simple. I don't teach you about chart patterns. I teach you about the core things that move the market and why, and here are ways that you can make your indicators and build your own charts to do exactly that. So that's kind of where I evolved from. Like, I wish somebody had this book that would say all these things. I'm like, hey, I'm just going to write one.
Well, that's the best way to do it. Fill a gap.
Yeah.
Right. So you got really excited talking about opening a chart and seeing what you like. What is it that you like?
Oh, right. In terms of charts?
Yeah, like when you look at a chart, what gets you excited?
I like the 30-minute charts because they're going to create a move in 3 to 4 days, if not the same day. So when I see something on those, when you can see behind me, there's a little green area there. That was gold miners. That was GDXJ a couple of days ago, and that oversold panic sell-off, cycle low, everything screams, and it goes lime green, and it's like, buy. And then you get like a 3-day pop in price. That's what I like because it's fast, it's quick. I mean, you've got to be an active trader. This is not for investors. But, yeah. Something that lasts 3 days is awesome because you get in. If it's not up by the end of the day, it should move up tomorrow just based on momentum and an oversold extreme where bargain hunters step in. So that's what excites me is a 30-minute, these quick moves. I call these kind of moves all the time in my morning videos for subscribers. Could be for gold, could be for silver, could be for the dollar, could be an index or natural gas. It's hard to kind of get those trades fired off quick enough, but they like to see that stuff because it gives us insight into the momentum behind our bigger swing trades. Like, that was a good opportunity. We can get into a swing trade the next day at the opening bell, simple, easy peasy, kind of ride it up for a few days, trim some profits. So I like short-term stuff.
Me too. My favorite is I like to pick the lows. I'm really good at finding a market bottom and yeah, I don't know why. It's like,
yeah,
everyone has a skill. I think this is the low.
Yeah.
Sometimes I'm wrong, and then There's a
Yeah,
line.
tops and bottoms are tough, but that's my passion. I love bottoms and I love top picking, and it goes against everything I teach. But that lime green spot is my bottom picking strategy that I programmed to happen, because I'm like, every time something like that pops up, I've got that set on a whole bunch of different ETFs. It pops up in my email box on my computer saying, "Hey, here's an oversold level. You can jump in." And
Make
I
sure you
hate.
got that stop loss locked in.
Exactly. You got to know where to put a stop in, because that low could have been like the straw that broke the camel's back, and then it collapses the next day. So it's all about position sizing. Never go big when you're buying a bottom. Don't make sure you've got a stop in place. With subscribers and swing trading, I always look for those, and then we wait for confirmation of a reversal, and then we get in and we're catching a bigger trend to the upside. So
You just
I
buy
trade
a
my
lot.
money.
Average up.
Exactly.
Average up, never average down.
Yeah.
Yeah.
Yeah. And that's one.
Hard to follow.
It's very tough to follow. It's yeah.
Anyway, I've taken way too much of your time. Thanks for this. This has actually been really fun.
Yeah, it's been great. I love it.
So I have one question left for you.
Yeah.
Is when do I get to ride one of those
VeFoils.
Yeah, the surfboard. Explain this to me, because I
Sure. So a couple years ago, I wanted to invent something really crazy and cool. So a couple of friends of mine.
A new charting platform of your own company, something else.
Yeah. So outside of the trading world, something like fresh and new. I'm a kiteboarder. I love kiteboarding, surfing. I love outdoor stuff. So I invented, along with a couple other guys, the world's first flying jet surfboard. So you fly up out of the water. I mean, it is so cool. And I learned everything about patents, and we wrote a patent, and we got a patent issued in 4 months, which is like record speed. Never even had one complaint. Like, it just went right on through, which was amazing. And we've licensed it out anyway. So we're just on the verge of going into production this week. Actually, this afternoon, I'll be going out in the bay after the market closes just to test out a new jet. And as long as all goes as planned, pretty much after that, we go start production phase. So it's just the coolest board. It's a surfboard with electric powered with a remote control in your hand, and it flies on a hydrofoil. So the board's got a long mast. It's got some little wings underwater. It's got a little jet built into the fuselage. And so you're flying 2-3 feet out of the water like Silver Surfer. And it is just the most incredible feeling ever. And so that's kind of our little passion or hobby. And it's turned into something really big.
That's awesome. I can't wait to try it. And I love that you looped it back into silver, which is why I asked you. Nice. Well done, my friend.
All right.
So thanks for joining me. Again, if anyone's interested in Chris's work, check out the technicaltraders.com. And if you like what we're doing here at Adelaide Capital, make sure you subscribe. If you're interested in silver, make sure you participate in our silver conference on the 11th. And thanks so much, Chris.
Hey, thanks for having me, Deborah. Take care.